Okay, let's go through the three trades that John Najarian brought out and Market Rebellion brought out today. Probably just about 45 or 50 minutes ago. And again, they didn't put a summary at the end, so I'll have to kind of be a little awkward here in the way I go through this. But the three were IYR, KSS, TGTX. And let's just kind of take a look here. IYR, it's a U.S. real estate trust. It's a bearish put spread. Um, I just did the front end of this our for our tracking. So in other words, I did this part the 24th of February, 90 puts I bought, and I think I got them for like $1.08. I believe is. We'll check that here in a second. Um, and I did not do the I did not sell the 86. It'll give us an idea of the general direction, and you're welcome to, if this is something you're interested in. I'm not, um, you know, putting them in. And let's see, we'll go back to, so I added them in, the front end of it by purchasing the 90. Um, and we'll just see how that goes. It's a put, so they want it. It's bearish. They want it to go down, so we'll see how it goes. And their chart. The thing when I looked at their chart, I mean, it's been in a downtrend, and then it kind of got broke. So, it looks like it may be back in an uptrend, or maybe it's a continuation here with just this little off ramp that it did over here, which maybe is the play that whoever was doing these particular um, puts. So, I'm looking at this, something maybe like in here in that downtrend, and a continuation down. Okay, I get that. Or is it a turnaround? I mean, if we didn't, I'd probably have waited till we got a lower low here. But there is this, definitely everything's a downtrend. That's a 200-day moving average in there. And so that must be the way they're playing this. Or they could be a market maker, doing, messing with all of our heads. The next one was Coles, and again, I did not play this one either. Yeah, it's a bearish three-way. So the first two parts of these, 78 cents for 27.50 puts, and the stock price currently at 32.37, and then 25 puts for 35 cents that they sold. So they bought the 27.50s, they sold the 25s, and then they sold the 30s. I've just got the first two parts in here. You'll see in just a second. Complicated, but in essence, it's a bearish spread, and we'll see if it goes the direction of what they're saying for those. Not something I'm particularly interested in. Now that I looked again at the IYR, I don't normally play real estate. I probably wait again until it broke this, at least broke this 90 right here. If that was something I would play, and we're not quite there. I'd feel even more comfortable if we broke this, but this is on a daily chart. If I look weekly, I don't know. We'll see. the look of it just is not something, and I'm not familiar with this particular underlying. KSS, uh, again, that we just went through. The bet is bearish. No continuation here, potentially. Something like that. I don't know. Yeah, as far as it being in a downtrend, it looks like it's just been consolidating here for a while, um, and you know, bouncing off of here, I guess is what their play is, going down. It's hard to read, you know, what people are thinking when they're in this, or the institutions or the market makers that may be just messing with us. Um, okay, so I have that, and then the last one John had was the TG Therapeutics. When these were purchased, over 5,000 February, call spot at 20, so above the current stock price, between 24 cents and 40 cents. And, you know, the stock was trading between 1785 and 1792. Again, I didn't take this. I'll probably look at it again. I put it into our paper portfolio here, already up $12.50. I just did this before the close. Just one contract at the 20. I believe John normally says that he buys them at their strike price close to the stock price. And so that would have been, well, 17.50 or 18 for those, or excuse me, $1.45, $1.25 for those. So if they were paying 20 here, you see around the 75-cent portion, I paid 55 cents in here. So they've already gone up a little bit in price. So those were the three that they covered. We'll just keep kind of tracking these. Let's take a look at the chart. Definitely been on an upswing. Have some type of earnings coming out here. I think he noted that. I think Kohl's does also in March. So, you know, before the expiration of the option contract. So we'll see. Again, I did not take this. Curious, you know, just kind of looking at it. You know, that would be a double top there if it went up and we hit around in this area. So there's some resistance up around here. But again, we got the 200 starting to bend up, 200 day moving average moving up. I, again, did not opt to take any of these three trades. I'll probably look at them again over the weekend or a Monday. And so that's it, except just kind of tracking the ones that we have purchased so far. You know, Google's down just a little bit. ON is down quite a bit, but it has a long, you know, we've got till April on that. Kohl's, we just purchased, you know, the real estate trust was the one today. Starbucks made a comeback today. Again, we've got till February 17th. We got some time. And STM, you know, it's a put also, and so it's profitable at this point. The Man U, John talked about that in his 3 at 3 piece that he did. You know, it's gone down. It's down, was $1.08, I think, when he recorded and now it's down to $1.52. So that one's moving in the right direction. And then the Western Union one is down just a little bit, but again, we've got till February 17th, which is, you know, only a week from today. So we'll see how the rest of these play out. I am, you know, none of these are recommendations by me. You know, these are things of just tracking, just curious to see how they play out in the general direction that they have, whether they're puts or calls. And the thing I'm really curious to see is on Tuesday, because the Bureau of Labor Statistics has changed the way they calculate CPI. I'm anticipating that we'll see some really big movement upwards with that CPI change, because it's going to drop. I think they were looking for maybe 6.2% CPI, and I think it's going to be something much lower than that because of the way they calculate it. Doesn't mean the economy is better, but I think the calculation will be better. So I'm curious to see how that plays out against these stocks and actually my whole portfolio. But anyway, that's what I wanted to cover today. And remember, there is always a better way.